So you're not surprised that interest rates have risen. In fact, it's all over the news. Interest rates are up more than 1% on their historical lows. And if you caught last week's video, and if you didn't, you should watch it. It was all about how rising interest rates impact your monthly payment and your buying power. But in short, 1% increase in interest rates drops your buying power about 10% if you're looking for the same monthly payment. And because of that big shift in buying power, people are looking for alternative ways to get lower payments. And there is a lot of discussion. In fact, for mortgages, controversial discussion on what to do. And so if you look back in history on what we've done in the past when affordability was a big issue, and I'm talking about mid-2000s during the boom, we did things like interest-only options, which is where you just pay the interest on your principal balance. We did negative amortization loans, which are very, very risky, but essentially you pay under an interest-only payment, and whatever you don't pay in principal balance gets tacked on to the end of your mortgage. Now, there's a lot of reasons why people did that we will not break down in this video, right? But the wrong people took advantage of that type of loan, which is why they were so catastrophic. There's also adjustable rate mortgages, right, also known as ARMs, which are fixed for a short period of time, anywhere between 3 and 10 years, at a lower interest rate, and then amortized over the rest of the term at a higher interest rate or a variable interest rate. And those are still in existence today. And then we have different buy down features with discount points or a temporary reduction in interest rate with a fixed rate option. And so lots of those things have occurred in the past. Some versions of them exist today, but they're not widely adopted, and most people are actually terrified of those features. And so when you have a lot of fear, right, with that kind of creativity, the only other option to create affordable mortgages is to extend out the term, right? And so, whenever you talk about people paying even more interest or even longer payments, right, people get heated and there's a big debate. And so we're going to talk about the pros and cons of a 40-year mortgage in today's video. And I'd love to hear your thoughts in the comments below. And I'd love for you to come with questions on this week's live, which is at 6 p.m. on Wednesday. Now, before I jump into the pros and cons, I do want to let you know that 40-year fixed mortgages are not a common loan. In fact, they're hard to come by, and you have to do your own research and investigate the banks that offer these loan programs. There isn't one that I know of as of January 21st, 2022, that's being offered by any of the agencies, Fannie Mae, Freddie Mac, FHA, or VA, but it is a topic that is brought up on a regular basis as one of the solutions to help this affordability issue. Now, I didn't mention a 40 or a 50-year mortgage in the solutions in the boom time. They were around during the boom as well, but I do want to caveat that at that time, they were primarily for people in a subprime category, meaning a lower credit tier. And they were done just as a way to excuse like very, very high interest rates, right? Like 7, 8, 9% interest rates. So that's why they were done back then. And I think that a 40-year fixed mortgage in this time period would be much different, although I am not the rule maker on that, okay? So let's jump into why people don't like 40-year fixed mortgages. Well, for starters, they're more expensive. Generally, you're paying a longer term. The longer you pay interest on, the more interest, the more expensive it becomes, okay? So con number one, more interest. Number two is that they were historically done at higher interest rates, right? Again, you're paying higher interest for a longer term, more expensive. Now, I have not quoted a 40-year mortgage myself personally, so I do not know for sure that they are at higher interest. But I do know that the banks that are offering them are brokers and non-QM loans, and in general, those interest rates seem to be on the higher end. So take that at what it is. Also, those loans can sometimes come with higher costs, right? So, and I'm talking about in origination and discount points. So again, like I said, do your own shopping, but longer interest, higher interest, more expensive. Now, why do people like a more expensive loan option? Well, that's because on a monthly basis, a 40-year mortgage is much more affordable than a 30-year mortgage, right? And so if your purchasing power has been decreasing because of interest rates, this is one way to combat that. Now, I will tell you that we've seen an increase in terms as it relates to auto loans, and people don't have the visceral reaction that they have to auto loans that they have to mortgages. And I do want to point out that yes, it is more expensive in the long haul, so is a 30-year versus a 15-year. But one thing I am going to point out is that many homeowners will not be able to purchase a home if interest rates and home values continue at this pace. And so having a longer term mortgage will get people into their houses sooner, right? Which means that even though they're not paying down their balances, they're still able to take a part of the appreciation, which is what your house increases in value regardless of what you are paying down in your principal, right? I want to explain that again, right? So assume that you buy a $400,000 house and appreciation is 5%. That is $20,000 in increased value off of $400,000. Now, that does not matter what your mortgage is. Like your mortgage could be $200,000, you will still have the same $20,000 increase in appreciation based on what the market is doing. Now, that is not a guaranteed return, but it is pretty significant when we're talking about people's long-term investments. And as it stands today, housing is actually the primary investment vehicle for most people's retirements. So, allowing people to enter it in, giving them an affordable payment is really important. Now, the other thing that you have to think about, in addition to them being able to take advantage of appreciation, is what's their alternative? Okay, so whenever you're deciding whether something is too expensive or not, you actually you can't compare a 30-year with a 40-year if a 30-year isn't really an option. What we're comparing is what is rent today with a 40-year option, right? That's the important thing you're missing, right? And so like rental rates are appreciating in the double digits, guys. Some areas are up to 14% increase in rent, and that is only going to continue because, like I said, right, there isn't enough housing to go around, and now more and more people have to become renters. So guess what? Supply demand happens, rental prices continue to go up. So I myself am in favor of having a longer term mortgage option for people, and not just because I'm a loan officer and yes, I get to help people, but because I truly advocate for home ownership. I know that you might be new to the channel, or you may have heard this story like the 500th time I've said it, but owning a home was my mother's only way of saving money and getting ahead while raising 4 children and having to work 2 jobs, right? The equity over 20 years was enough to set her up on her next pathway to wealth. And I will tell you that it's almost near impossible for some people to be able to save that kind of money, right, for their retirement or their next home purchase without the investment of a primary residence. And so this is why I'm passionate on it. But yes, I will also tell you a couple of other things that are important for you to know. Well, one, people don't pay a 40-year mortgage. They on average live in their properties no longer than 13 years. So it is a 13-year loan problem, right? Not a 40-year mortgage loan problem. And in addition to it, they generally have a mortgage for 4 to 6 years, right? Before they refinance, cash out, or buy a different house, right? I mean, we're not talking about a true 40-year life sentence, right? People have options. And I just think that people, they judge things prematurely without really assessing what the alternative is and what additional things they can do, like extra principal payments, right? Refinancing when they're in a better financial position, right? What other options will they have in the future to better that situation so that they aren't paying 40 years of higher interest? All right, so these are just my 50 cents. You guys will have your own. It's America. We're entitled to our own financial opinions. I just want people to be successful, and this was a pathway for me and my family to be successful. So anyway, I'm here to answer all of your questions. If this becomes a real life mortgage scenario, you will hear it from us first. But until next time, guys, I'll see you on another live or another awesome mortgage video.